there are three types of activities under cash flow statement. One is operating, which is no doubt the business when you started the complete related operations, which is nothing but your operating activity, which is very important concept for the management. They want to get to know how much they are generating, how much they are receiving, receipt nature, and how much is going for the payment. The financial position, which is always talking related to long-term basis. Hello everyone, a warm welcome to one and all. I am Natesh, lecturer in commerce, Vidhyaashram First Grade College, MYSURU, the Temple of Excellence. So we are in the Unit 3, Session 1, 4th semester B.Ba Management Accounting. The chapter name is Cash Flow Analysis. So the management, any business or organization, any company, they are trying to use for management. So using a different technique for taking a proper decisions, right? So, and today my agenda, you will get to know the meaning of cash flow statement, okay? And the definition of cash flow statement, cash and relevant terms as per the accounting standard 3. So which is a revised. So as per your syllabus, which is clearly specified accounting standard 7. So use and benefit of the cash flow statement, where exactly they are using, the usage part or application part, the limitation of cash flow statement, what are the limitation or disadvantages we are finding here, and the cash flow statement provisions, Indian accounting standard 7. Okay, now difference between cash flow statement and fund flow statement. What are the major difference we are finding in the comparing to cash flow statement as well as fund flow statement? So now the procedure for preparation of cash flow statement according to Indian accounting standard 7, because so most of the company, when we are talking related to India, so they want to maintain accounting standard for in India, so which is applicable for accounting standard 7. Moving forward, the first one, you will get to know the meaning of a cash flow statement. The cash flow statement means if the cash, either the businessman, once they started business or a company, they started, there are two types, two natures we are finding. One is outflow, money is going from the business, and inflow means they are receiving a cash. Okay, so cash or cash relevant, equivalent. So the cash flow statement is a financial statement because they want to know, get to know the flow of cash. The management want to take a proper decision. So which is related to the complete transaction. We call it as money or cash, cash or cash equivalent related. Either you're keeping a cash within the business, which is called for cash in hand. The same cash if you deposited in the bank, so which is a cash at bank. So cash easily you can get the cash. Easily you have to spend. So definitely we need to get to know the flow of cash. Okay, inflow means which is generating, and outflow means you are investing. Your money is going for the outside. So that provide information about the cash inflow, that is nothing but the receipt nature or receiving nature. Okay, how the business or company are receiving cash because of cash sales or data, the credit sales. They are expecting a money within one accounting year. And cash outflow, which is nothing but your payment. The payment of business or a entity over a specified period of time. So every business, every organization, every company, they are preparing a accounting for 1 year. They want to get to know the cash inflow and outflow. So the management, then only they can take the proper decisions. Okay. So it tracks the movement of cash and cash equivalent. Just what I told, the cash equivalent example, cash at bank or marketable security. Easily you can sell and get the cash you can receive, and help in understanding the source and use of cash within an organization, because the cash which is playing a very important role for day-to-day activity. So that's why the cash short-term received and long-term received, which is going for the fund flow. So whatever there are three types of natures we are identifying. In the coming slides you will get more clarity about the definition of cash flow statement. No doubt whatever the receipt and payment which is received or paid by the business or company, So the cash flow statement is the financial statement, okay, the financial statement that present the cash inflow and outflow. The present means what? They want to disclose the accounting information. They want to prepare the statement. Okay, so they want to get to know the inflow and outflow of a business during a given period. Okay, so typically on a monthly basis, quarterly or annual basis, according to their convenience, they want to get to know what is the cash received, how much I have paid. So money is going means outflow, received means receipt of inflow. It summarizes the cash generated from the operating activity. So there are three types of activities under cash flow statement. One is operating, which is no doubt the business when you started the complete related operations, which is nothing but your operating activity. So the business, how you're operating, what and all the receipt nature and payment nature you can identify with the help of cash. So which is coming under the business operating activity, such as sales and payment to supplier. So if you want to pay for the supplier, of course you need to collect money from the customers, and the cash sales basis only you are trying to go for payment of supplier. Okay, and the investment activity, no doubt you are investing, you are acquiring a fixed asset, or you are investing for the share market or preference shares or dividend. So long-term investment. Okay, either you are the disposable of asset means what? The disposable of asset means you are selling your property, you are selling your asset. So immediately you are receiving a cash which is a receipt nature. So again, in operating also we can find out inflow because you are receiving cash because of sales. You are going to pay for operations related activities, nothing but you are getting a raw material, you need to pay for the supplier. Okay, and the investment, so when you are investing to any company or you are acquiring any asset, of course no doubt your money is going out, so which is the cash outflow. So the same thing, if you have an excess of asset, you are selling means you are disposing your asset, immediately you are receiving a cash which is coming inside. The financial investment activity like such as purchase and sale of asset. Purchase means which is going for the payment, and sale means which is you are receiving a cash. And the last activity which is related to financial activity. At the time of running your company, you need to get finance support. Whenever you are raising a fund, okay, you are receiving, you are taking, you are borrowing a loan, you are issuing a shares. Okay, so the issuations of shares can be you are receiving a receipt nature with the help of issuing of shares. Okay, at the same time when you are going for the repayment of loan, which is going for the payment side. Okay, when you are getting a loan, no doubt which is a receipt nature. When your repayment of loan, which is coming under the payment category, so you need to identify properly, so which types of activity. So whenever you are raising a finance, no doubt you have to bear the interest. Okay, whenever you are issuing a shares to the shareholder, you need to pay for the dividend. So obviously we need to identify the item. And the rising fund through loan and issuing a stock or share. Okay, moving forward. So under cash and relevant terms as per the accounting standard 3, which is revised, but which is clearly there for Indian accounting standard 7. So the anyway, which is slight changes we get to know here. Now as per accounting standard issued by the accounting standard board, so the first one, the cash fund. The cash fund, we are talking related to cash flow statement or cash flow analysis. So everything which is connected to cash only. So the first one, the cash fund include cash in hand, because the business are maintaining a sufficient balance for running a smooth business. Okay, and the demand deposit with bank. So if any business, any bank, any organization, they are opening a current account in the name of the business, so they are maintaining a balance in the account, so which is nothing but your demand deposit. Okay, and the cash equivalent means what? Any convertible, marketable security, easily when you sold, easily you can get the cash. So whenever you need to find out the liquidity position, easily if it is converted, so no doubt which is a marketable security is the best example. And cash equivalent are short term, okay, because any business they want to maintain a short term finance support or money, the cash they want to maintain. So that's what the current assets will be always highly liquid investment, marketable security. Okay, so easily, for example, if you have any certificate which is related to, easily you can sell, so immediately you can receive the cash which is coming under, so readily convertible into cash. Okay, which are subject to insignificant risk of change in the value. Of course, the value are differed here. Okay, if you have a check, a promissory note, bills of exchange, easily you can convert, right? So as cash flow or inflow and outflow, no doubt whenever the business are receiving cash which is coming inside the business, inflow. When the business are going to pay, so which is going outwards, right? So which is called for outflow of this cash and cash equivalent. The statement of the cash flow show the three main category of each inflow and outflow. Either we are talking related to operating inflow, operating outflow, again investment inflow and investment outflow, the financial inflow and financial outflow, because you need to identify there are three activities going on in the cash flow statement. So operating, investing, financial activity. The first one, operating activity, we are talking related to only for business which is the operation. Okay, so operating activity or principal revenue generated activity of the enterprise. Okay, now revenue means which is always compare with the sales, right? So or you can call it as a turnover. And the investment activity include the acquisition, because to run the business you need to acquire number of assets, right? So which is nothing but one kind of acquisition. And the disposable of long-term assets means, so if you have an excess asset you are try to sell, immediately you are receiving a cash. At the time of acquisition your money, cash is going outflow, but at the time of selling any specific asset you are receiving a cash. So other investment not included in the cash equivalent. Last one, the financial activity, no doubt to run a business, to run a company, you need to raise a fund. So how you are raising fund? Either you are issuing a shares, okay, or you are getting a loan, so which is one kind of receiving nature, so which is coming inside the business, right? So inflow, investment, financial inflow. Activity that result in the change in the size and composition of the owner capital, okay, so including preferential capital in the case of company. In case of company there are different types. So the form of business can be classified into sole trader, partnership, joint stock company, into undivided family. We are talking related to company means no doubt which is a share related. And borrowing of the enterprise, any enterprise they are borrowing a loan which is coming inside at the time of repayment, which is going outside. Okay, so for bankers are receiving. Under use and benefit of the cash flow statement, why they are using, where exactly they are using, and what are the benefits we are getting for using a cash flow statement, the management how they are getting a benefit. So the first one, assessing the liquidity. Easily you can get to know the liquidity position. So either you are preparing quarterly, monthly, or 6 months once, or yearly once, you want to get to know the cash availability. The cash flow statement help to evaluating the company ability to generate cash or meet the short-term obligation. So if you have any payment, of course the company are committed number of payment. So how you are going for the settlement? So you will calculate how much you are expecting, okay, and from the expectations you are trying to go for pay for the supplier. Second one, evaluating the cash flow from the operation. You need to evaluate properly, okay, based on the three activity. So the cash flow statement provide insight to the cash generated from the company core operation. So it is very, very important concept for the management. They want to get to know how much they are generating, how much they are receiving, receipt nature, and how much is going for the payments. And third one, understanding investment activity, investing activity. You need to understand the investing, where I have invested, how much the money is, cash is gone. So the cash flow statement detail the cash flow or related to investment in long-term assets. Either you are investing for the long-term asset, whatever the availability of cash which is going for acquiring asset, okay, or such as the property basis and the plant, equipment, machinery, as well as investment for other company. Either you are investing to acquire, okay, either you are investing for other any substitute company, okay, either you are investing for the foreign currency or foreign shares or security. Next, fourth one, analyzing the financial activity. You need to analyze properly what and all which is related to the financial aspect here. So this section of the cash flow statement provide information about the cash flow from the financial source. Okay, again we can classify it into inflow and outflow. So inflow means you are receiving a cash because of issuing of shares. You are trying to go for repayment of loan which is going for the payment. When you are approaching or borrowing a loan which is coming under receipt nature. And assessing the cash position, you need to get to know the how much I have available, the sufficient cash you have maintained. So the cash flow statement provide an overview of the beginning and end balance during the reporting period. So what is the opening balance at the end of the year? For example, Jan 1st you are starting an account, what is the cash position? At the end of the December 31st, what is the cash position? You will get to know. And no doubt predicting a future cash flow. So because of preparing a cash flow statement, you can predict how much I can expect from the outside, like customers, okay, how much I want to pay for the suppliers. So easily you can get to know. So by analyzing the past cash flow statement, because last year you have prepared cash flow statement. So for the previous record, you are just for referring for preparing for the current year. The statement, investors, analysts can gain inside the company historical cash flow statement or pattern, because already you have prepared, you are referring for this year. So the previous data, whatever which is there in the company, so at the time of preparing for current years, so which is very easy. And no doubt there is a number of limitations also, we will get more clarity here. So one is non-cash transaction not possible, because the cash flow statement which is only focusing on the cash related item, cash or cash equivalents. So the cash flow statement focus on the cash inflow and outflow, which means may not be reflect the non-cash transaction. Okay. Next one, timely of cash flow. Timely of cash flow, you need to take a proper decisions. Okay, the day-to-day running is very difficult. So the immediate taking a decisions, unless you are not preparing the cash flow. Okay, so the cash flow statement provide information about the cash flow during this specific period, but it does not provide a detail on when cash flow occur within that period, because the decisions which is completely either you are getting an opportunity, you don't have any cash position, so you cannot go for investing. So the lack of qualitative information, which is a complete qualitative factors. So it does not provide any qualitative information about the nature, quality, timing of the underlying transaction. So which is dealing only for the quantitative factors. The fourth one, potential manipulation. So which is something changes we are finding here. The company may employ various accounting technique to manipulate cash flow, such as delaying a payment, accelerating receipt. Either the company are expecting, which is no doubt a receipt. Either the company want to pay for some external source like supplier or income tax. Okay, so whatever it is related for operated finance or investment. So the limited predictive value, the cash flow statement primarily reflect to historical cash flow, because we are referring the previous record whenever you prepared for the cash flow for the last year. So at the time of current year, so we are just for referring for the historical data purpose. So may not be reliable predictor to future cash flow. So either, for example, there is most of the chances like when you are expecting a cash from the data, so the data, we call it as a bad debts, means you are not expecting. Good debts means you can expect. Still you have a doubtful means doubtful debts. Okay, so in that case it's very difficult. Lack of comparability. Okay, different companies may use a different method of preparing their cash flow statement, so which can reduce the comparability between the company. So the company to company, their technique, their method is keep on change. Okay, so it is very difficult. Moving forward. So here under cash flow statement, provisions of Indian Accounting Standard 7, because which is clearly specified in your syllabus accounting standard for 7. So here the classification of cash flow, because we are classified into 3 category, no doubt, which is operating and investing and financial activity. So the statement of cash flow should classified in cash flow 3 category: operating activity. So before, if you don't have any idea about the theoretical part, so it is very difficult to solve the practical numerical problem. So that's what you need to be well familiar. And investment activity and financial activity, which is coming under the 3 category. Again, we can classify it into operating activity, inflow and outflow, investing activity, inflow and outflow, financial activity, inflow and outflow, of course. Next, under operating activity, cash flow or cash relevant. The cash flow from the operating activity, which include the cash receipt and payment related to entity core operation, which is very important. At the time of preparing a cash flow statement, you want to classify properly. So under investment activity, cash flow from the investment activity involve the acquisition and disposal of long-term assets and investment. We are talking related to only for investment activity. When you are receiving no debt from the investment, you are accepting the cash. When you are trying to go for investing, your money is going out. So there also you can find out inflow and outflow. So under financial activity, because when you are raising a fund, no doubt you are receiving nature. Now you are trying to go for repayment of loan, which is your cash is going out. So they include cash flow from the issuing, because you are issuing a shares when you are talking related to companies, or repurchasing of equity shares. Repurchasing of equity shares, the payment is going. Issuing or redeem debts instruments or debenture, okay, the payment of dividend, because you are issuing a shares to shareholder, of course the shareholders are expecting a dividend from the company. So interest on borrowing fund. So now you are raising a fund with the help of bank loan, okay, of course you need to pay for the interest, which is related to financial activity. Moving forward, non-cash transaction. This transaction include acquisition of asset. We are not talking related to cash. So which is one kind of acquisition for the asset by assuming the liability. So exchange of non-cash asset. That means what? So if you have an excess building, you are selling, the same time you are acquiring a machinery or equipment. So which is one kind of non-cash transaction. So, for example, the land, for example, 2 acres land, empty land, you are trying to sell for one more person, you can acquire for the other building they are offered. Okay, so which is one kind of exchange. And conversion of debt into equity. Easily you can convert debt into equity or equity into debt. So based on the conditions which is clearly specified. Now foreign currency cash flow, because as a company which is related to compared to India, they are trying to invest for any other foreign country. So that is also possible. When you are investing which is going for other country, so when you are receiving, no doubt you are receiving from the foreign country investment. So the cash flow dominated the foreign currency should be translated into the entity functional currency using an exchange rate at the rate of the cash inflow. For example, any company, when we are talking related to Indian company, if they try to invest in India, so there is no currency variation. The same time, if they try to invest for foreign company, so the currency variations we are finding, so more benefits we are expecting. And the disclosure, the standard, whatever we are talking related to Indian accounting standard, of course you need to disclose. So the standard required to specific disclosure in the cash flow statement to provide additional information about the entity cash flow. Either we are talking related to operating, financing, investing, whatever it may be, you need to be a transfer. Now, difference between cash flow statement and fund flow statement. So what is the major difference we are finding? So there are which is a management or using a cash flow statement and a fund flow statement for taking a proper decisions or going for the before taking any steps. They are trying to use one specific tool. Okay. So the first one, definition. Under cash flow statement, report cash flow and outflow. You need to specify. And under fund flow, outline change in the financial position. The financial position which is always talking related to long-term basis. Okay. So the purpose, accessing the liquidity and viability, to check the accessibility, what is the liquidity position, you will get to know using a cash flow statement. Under fund flow, the analyze long-term financial position. Long-term financial position you will get to know. So the focus, the cash and cash equivalent only under cash flow statement which is the focusing. But under fund flow, the movement of fund, either the source of fund or application of fund. So the cash and non-cash items are considered. And components, here operating activities one, activity, investment activity, financial activity, which is main focus. Under fund flow statement, the source of fund, how you are raising a fund, either bank loan or debenture, equity shares or preference shares. The source what you are generating. There are three types of source we are finding. One is owner fund, okay, borrowed fund or generated fund. And application of fund. From the source of fund, where exactly you have utilized. Okay, now coverage here, the specific period, that means monthly once, quarterly or yearly or 6 months once you can prepare. But fund flow statement, longer duration or multiple year also we can prepare for fund flow statement. So analysis. Here the cash generation from the business, how much they generated cash through operating efficiency also they can check it out here. And the cash utilization, how they properly they utilize. Under fund flow statement, movement of fund, how it is the movement of the fund. Okay, and change in the working capital, fixed asset, debt, equity, preferences. Under usefulness here, short-term cash management, cash flow statement is very useful, and cash generated capability is very important. You need to identify. And under fund flow statement, so which is suit for the long-term financial planning, okay, and the financial healthy assessment. Last one, accounting standard. According to Indian Accounting Standard 7, we are preparing a cash flow statement. IFRS, GAAP are relevant accounting standard. Okay. Under fund flow statement, there is no specific accounting standard or mandate. Okay, mandatory. Moving for the procedure. So which is very, very important to prepare the cash flow statement. What and all the procedures are involved. Okay, so the procedures to prepare the cash flow statement according to Accounting Standard 7. So first one, identify the cash flow. Either there are number of transactions are given. So majorly we need to identify which item is going under the operated, which item is going under the investment, which item is going under the financing. Again, we need to identify which is in the receipt nature, which is in the payment nature. Okay, so determine the different category of cash flow within the organization. These are typically classified into three major categories. So one is operating, investment, financial activity. Okay, now operating activity. Under operating activity, again we classified inflow and outflow. So identify the cash inflow and outflow directly related to company core operation, which is very important. Core operation means what? Buying and selling. Investment activity, again determine the cash flow associated with the purchase and sale of long-term asset. At the time of purchase, which is always outflow. At the time of sale of old asset, which is you are receiving a cash flow, no doubt inflow, such as property, plant and equipments, machinery. Under financial activity, no doubt how you are raising fund. When you are raising a fund inflow, when you are going to pay, so which is going outflow. So identify the cash flow related to company financing source, where exactly they're raising a fund. Okay, now fifth one, non-cash transaction. Exclude non-cash transactions such as the depreciation, amortization and gain, a loss on the sale of asset from the cash flow statement. You need to identify depreciation means the value of the asset are decreased because of day-to-day usage. Okay, and the next one, prepare cash flow statement. After analyzing all these things, okay, we are trying to prepare for the cash flow statement using a major three category: operated, investment, financial. Using the information of gathering of previous step, prepare the financial statement, either direct method or indirect method. In the coming section, you will get more clarity. So procedures for the preparation, again, we need to identify under operating activity, investment activity section, financial activity section. Okay, so present the net cash flow. This is very important. After receipt minus payment, so what exactly, either you're getting a positive or negative, so which is very important activity. By adjusting the profit and loss of non-cash item, change the working capital. Okay, and coming for the investment activity section, show the net cash flow investment activity. After classifying, after subtracting from the receipt minus payment, you will get to know the net cash flow from the investment activity. So including cash flow from the sales and purchase of long-term assets and investment, which is talking only related to investment activity. Under financial activity section, present the net cash flow financial activity. How? Receipt minus payment. Again, the financial receipt means what? How you are raising source of fund. Okay. Include cash flow from the borrowing, issuing of equity shares, and the payment of dividend, the repayment of borrowing. Suppose you borrowed, okay, after payment, so then also you are able to find a positive. So that is a net operated. Net operated, net invested, net financing. Now reconciliation, which is nothing but taking the total for all the three category. So reconcile the net increase or decrease. If it is positive, no doubt, which is increase compared to for if 1 year preparing or 2 years cash flow statement preparing. If it is increase, the decreasing nature, easily we can get to know. So current assets increase, current liability decrease, the cash equivalent by adding the net cash flow from operating, investment and financial activity to the opening cash and cash equivalent balance, which is given in the question. So easily we need to adjust. Next one, disclose. Provide additional disclosure to require by the accounting standard, Indian Accounting Standard 7. So such as the amount of significant non-cash transaction, the composition of cash and cash equivalent, and any restriction on the use of cash and cash equivalent. So after doing an adjustment, opening balance, add a net. So finally we are getting closing balance. Keep on watch for next section. Thank you.